Yo, what's up, everyone? My name is Dom, and we're here to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. Statements in this program are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize all investments carry risk. There's no guaranteed profit. Alright, everyone, first one I want to bring up is Penn, P-E-N-N. Now, I own the stock in this one, and I've been riding this one to the complete shit house because this thing has gone from about 142 to about 70. So I bought the stock somewhere around here, I think around $90, and I've just been holding it and adding a little bit to it on the way down. But I think the sell-off in this thing is getting a little extreme here. Now, they reported a good quarter here. Looks like a nice surprise profit. I think they beat on the top and the bottom line. So I still want to read over that conference call. But now there was some extreme short-term buying here. Not really extreme, but when you add it all up, it is some nice volume here and all these different short-term contracts here. Now these contracts expire this Friday. They're buying the 72, 72 and a half, even the 75 call. Now, I do like the volume to open interest ratios in the 72, 72 and a half. You know, not a whole lot of volume here, but considering the open interest here, these are weekly contracts, so it's not the main expiry, the third Friday of the month. So it's kind of a little bit unusual here. I kind of took a little bit of a flyer here, and if Penn National Gaming continues to trade down here, we'll just have to cut the loss. But, I think considering they had a good quarter here, if you take a look at this chart here, it kind of looks like it's making a double bottom here. And I like how it made that second bottom on the day of earnings, which, it spiked up immediately after that. So I think we will have some good support there. If these options expire worthless or I have to cut the loss, I will probably just buy the stock if it gets back to this 64 level. Now that's quite a ways down, but considering the stock, how much the stock has fallen, I think it could maybe make it back there. But I'll be playing this for a short-term bounce. I'll probably be in these contracts for about 1 to 2 days. Definitely not going to be in these ones until expiration, unless we're hanging on to a little bit of a profit, trying to see a little more. But by then we might just be greedy, so either cut the loss, get out even, or take a small gain and move on to the next one and try and make some better profit if I'm not getting the move that I want. Now, this is another interesting one here, TTWO. Now, there was some nice volume here. This is definitely unusual by my standards here. 7,000 contracts traded here, open interest of about 965. Now, these are pretty cheap here. The implied volatility on TTWO Interactive is pretty low here, and I've seen days where the stock can move, 5-6% here. So, if you zoom in here at some of these individual implied volatilities, 29% here. You can control 100 shares of this $160 stock here out in September for an at-the-money call for about $400. That's about, I think, 3 or 4% of the stock price. $4.10 to control 100 shares of a $160 stock. Yeah, so that's about 3% or so, 4% maybe. I don't have the calculation. So I really like this trade here. I'm probably going to put this trade on tomorrow. I saw this unusual options activity after the close. So my strategy, what I would probably do here is I would maybe look at buying the 160, selling the 175. I probably would not buy the 165, sell the 175. Or because that's $5 out of the money here. Stock's at 160. So the at the money call here is the 160, and then I'd probably look to sell the 170 or the 175 against it. And yeah, let's take a look at the chart here because this is an interesting one here. This stock has a tendency to sell off after earnings because they are the under promise, over deliver type of company when it comes to their guidance. Now, as you can see here, the stock is making a little bit of a rebound here. It looks like going back to November of last year, we have some nice support at this 150, 160, 155 level here. Going back to even here, there's some nice support where we had a bounce there. So I really, really like this stock here. They might be buying this stock because Roblox has earnings next Monday. So I think Take-Two Interactive, along with Activision, would move on the Roblox quarter. I'm not really too sure why they are buying these contracts. I think they're just buying these contracts just because they think price appreciation in this stock, because it is about 30% off of its high. Well-run company, solid earnings in my opinion. They kind of had a little bit of a miss, but I think it's more of a under-promise, over-deliver type scenario that this company usually does on their guidance. So thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up. Make sure to share this video with somebody who likes and is trying to learn how to trade. Make sure to smash the like button so we can get this video out to a bunch of people and show them how we trade. And we'll see you in the next one.